Hello and welcome back to the channel. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, purely for education. Today we're examining a pure price action expert advisor called Engulfing Pivot Guard. It uses no traditional indicators at all, no moving averages, and no oscillators. Instead, it combines classic floor pivots with two-candle engulfing patterns and adds a managed hedge it calls the guard. By the end, you'll understand how it reads the market when it enters, and how it manages risk. Remember, this is educational information only and not financial advice. Let's get started. Let's start with the big picture. Engulfing Pivot Guard is a pure price action system. That means it reads raw candles and structural levels only. There are no moving averages, no relative strength index, no average true range, and no Bollinger Bands anywhere in this logic. Everything is built from two simple ideas that traders have used for decades. The first idea is the floor pivot. At every close bar, the strategy looks back over a set number of candles, 24 by default, and takes the highest high, the lowest low, and the most recent close. From those three numbers, it calculates a central pivot, which it calls PP, an upper resistance level called R1, and a lower support level called S1. Because every distance is measured as a fraction of the pivot range, the strategy scales naturally to any symbol or time frame without hard-coded pip values. The second idea is the engulfing candle. This is a two-candle pattern where the most recent candle's body completely swallows the body before it. When that happens, it suggests the side that had been in control has been overwhelmed. Where that engulf appears decides what it means. At an outer pivot, it reads as exhaustion and signals a reversal back toward the center. At the central pivot, it reads as acceptance and signals a breakout toward the next level. On top of that, the strategy carries a defensive feature it calls the guard, an opposite hedge leg deployed if the level it leaned on gives way. This kind of approach is generally aimed at liquid, range-respecting markets such as major currency pairs or gold on the 15-minute, 30-minute, or hourly charts. It is best suited to traders who want to study structured, rules-based automation. As always, trading carries real risk, and losses are a normal part of the picture. Now let's walk through the exact logic, step by step. On every newly closed bar, the strategy recalculates its floor pivots from the last 24 candles, giving it a fresh central pivot, resistance, and support. It then inspects the two most recent closed candles to check for an engulfing pattern. For a bullish engulf, the older candle must be bearish and the new candle must close higher, with its body at least as large as the prior body and fully covering it. A bearish engulf is the mirror image. Once a valid engulf exists, the strategy checks where it formed, and this gives four possible entries. The first is a reversal long. If a bullish engulf dips into the support zone around S1 but closes back above it, the strategy reads exhausted sellers and signals a buy, aiming for the central pivot. The second is a reversal short. If a bearish engulf pierces the resistance zone around R1 but closes back below it, it signals a sell, again targeting the central pivot. The third and fourth entries are breakouts. If a bullish engulf closes clearly above the central pivot, that is acceptance to the upside, and the strategy buys with a target at R1. If a bearish engulf closes clearly below the central pivot, it sells with a target at S1. Reversals are always checked first, so a single candle cannot fire both modes at once. For every base trade, the take profit is the structural pivot target, a clean move from one pivot to the next, with a minimum reward distance enforced. The stop loss is placed deliberately beyond the guard level, so the hedge always engages before the hard stop. Here is where the guard comes in. While the lone base trade is open, if price travels a set fraction of the range beyond the level it leaned on, that level is treated as failed, and the strategy opens an opposite locked leg riding the new direction. If price later reclaims the level in the base trade's favor, the guard is dropped, and the base is left to recover. Finally, money management sits above everything. Whenever any position is open, the strategy tracks net floating profit and loss across all legs. If that reaches the basket profit target, it closes everything at once. If it falls to the basket loss limit, it flattens completely. The total risk is always defined. Let's look at the actual MQL5 code as it appears in MetaTrader. At the top are the input parameters you can adjust: PivotLookback sets how many closed bars define the pivots, defaulting to 24. Engulf factor controls how large the engulfing body must be relative to the prior one. ZoneFrac sets how close to a pivot the candle must reach, and GuardFrac sets how far beyond a level counts as a failure. RewardFrac is the minimum reward distance, while BasketTpMoney and BasketSlMoney define the basket profit target and loss limit. Lots sets the volume, and Magic identifies the EA's own trades. Below the inputs is the buy block. The condition reads, if there is a bullish engulf and the candle's low reached the support zone around S1 while its close stayed above S1, the strategy prepares a long. It sets the level to S1, places the guard distance and the stop below it, and sets the take profit to the central pivot. The sell block is the mirror image. If there is a bearish engulf whose high reached the resistance zone around R1 while the close stayed below R1, it prepares a short, with the stop above R1 and the take profit again at the central pivot. Both blocks call open base, and at the bottom you can see how the order is actually placed. When the trade is a long, it calls trade.buy with the volume, the normalized stop loss, and the take profit. When it is a short, it calls trade.sell with the same structure. Notice that the stop and target are always passed together, so every position is protected the moment it opens. Let's bring this to life with a chart. On screen, you can see a candlestick sequence with 3 horizontal pivot lines drawn across it. The upper red line is resistance R1 at 1.0890. The middle line is the central pivot PP at 1.0865. The lower green line is support S1 at 1.0840. These 3 levels are the map the strategy trades around. And remember, they are recalculated on every closed bar. Watch the opening candles. Price begins near the central pivot and drifts steadily lower, candle after candle, pulling away from PP and heading down towards support. Each bar makes a slightly lower low, so sellers appear to be in control as we approach the S1 line. Then we reach the support zone. A small bearish candle prints right at support, its low dipping toward the green S1 line. This is the candle that matters, because the very next bar opens near that low and closes strongly higher, with a body that completely swallows the candle before it. That is our bullish engulfing pattern, and crucially, its low tested the support zone while its close finished back above S1. The strategy reads this as exhausted sellers at support, and the buy entry marker appears. Notice how the stop loss sits down below the support line, beyond the guard level, while the take profit target is set at the central pivot above. From there, follow the move. The candles turn upward, each one building on the last, climbing away from support. Price works its way back up through the middle of the range until it reaches the central pivot line. As it touches PP, the take profit marker prints. That is the first complete trade, a reversal long from support, banked at the central pivot, exactly as the logic intends. But the move doesn't stop at the center. The candles push on above PP toward the upper boundary. Bar by bar, we climb until price reaches the resistance zone around the red R1 line. Watch closely here, because now we're looking for the mirror setup. A small bullish candle prints just under resistance, nudging into the zone. Then the next bar opens higher, pokes above the R1 line briefly, but closes firmly back below it, and its body fully engulfs the prior candle. That is a bearish engulfing pattern at resistance. Its high pierced the resistance zone while its close finished back below R1. So the strategy reads exhausted buyers, and the sell entry marker appears. This time the stop loss sits above resistance, beyond the guard level, and the take profit target points back down at the central pivot. Now follow the decline. The candles roll over and head lower, each one stepping down from resistance. Price retraces the ground it gained, moving back through the upper half of the range until it returns to the central pivot line. As it reaches PP, the second take profit marker prints. That completes the short trade, a reversal from resistance, again banked at the center. So across this single illustration, you've seen both halves of the strategy. A bullish engulf at support gave the reversal long into the central pivot, and a bearish engulf at resistance gave the reversal short back into the central pivot. In both cases, the engulfing candle is the signal, the pivot level is the location that gives it meaning, the stop sits safely beyond the level, and the target is the next structural pivot. and had either level given way instead of holding, this is exactly where the guard hedge would have stepped in to defend the position. Of course, no pattern works every time, and real markets produce losing trades too, which is why the basket money management always defines the total risk. That brings us to the end of our breakdown of Engulfing Pivot Guard. We covered how it builds floor pivots from recent price, how it uses two-candle engulfing patterns to signal both reversals and breakouts, how the guard hedge defends a failing level, and how basket money management governs the overall risk. I hope this gave you a clear, structured way to think about pure price action automation. Everything here is educational information only and not financial advice, and nothing in this video is a recommendation to buy or sell. If you found it helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.